Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Steve Rogers, CEO of Shelton Capital, to discuss engaging younger employees to start saving early for retirement and investing wisely. Steve, it's great to have you with us. Welcome to Trade Talks.
Yeah, thank you so much. It's great to be here with you today, Jill.
You got it. And America is facing unrelenting retirement savings challenges, with younger investors not being properly engaged in saving or planning for retirement. Steve, what do you think is contributing to that?
Well, there are really three reasons. Number one, and the biggest, is a lack of education. Returns inside of retirement plans are first driven by tax benefits. So if you think about getting paid $100, what ends up in your paycheck is $70, and the missing $30 gets paid out in taxes. So if you put that money back into a retirement plan, you keep the $30 divided by $70, that's a 42% single day return on your investment before you even make a purchase in an equity or bond fund. So when you invest, the real benefit is tax treatment of that money, not any individual return. And speaking of investment, and then speaking of individual investments, that's the second issue. Things like crypto and meme stocks dominate headlines, and people respond to buzz. So some surveys indicate that millennials are actually more likely to invest in crypto than the equity market. So you can see that impact. It's the rabbit to the retirement plan tortoise. So these investments sound a lot more exciting, but mathematically speaking, no investment opportunity holds up against returns they're generated by these tax benefits inside of a retirement plan and potentially matching contributions. And finally, the third issue is employers. Employers and small businesses, where the mass majority of employees in the U.S. economy are busy. They're running their own business. They don't generally know anything more about these plans than younger investors. So they don't participate in education. They don't provide education. And finally, for many of them, they perceive a retirement plan traditionally as being a liability as opposed to a benefit because of the perceived litigation risk.
How did the COVID pandemic amplify retirement savings challenges?
Well, that's a great question. COVID meant isolation, and for way too many people in our economy, job losses. So this simply made a larger number of people poorer, and many investors, many participants view saving for retirement as a luxury good instead of their first most important investment. So this really slowed the accumulation of wealth for people that were at home and or unemployed over the course of almost 2 years.
Is anything being done on the national level to create fundamental change with savings habits?
Yeah, there's quite a bit being done. Initially, 20 years ago, the Department of Labor began making announcements trying to push employers to support this. And in 2019, the Secure Act was signed into law in the previous administration. What this did is it just made it way easier for employers to provide plans, and it made it easier for participants to participate and build wealth. And there are a lot of details behind that, but they're really trying to drive employers in this direction as well as participants. And then again on March 29th, the reception to this universally was wonderful. The Secure Act 2 was passed by the House overwhelmingly. The vote was something like 444 to 5. So there's almost unanimous bipartisan support for making it easier for these plans to come into the small business environment, and to empower employers and participants. Finally, just one more thing. States are also involved in this. It's not just a national level, but many states, for employers of a certain size, maybe 25 employees or 10 employees in some states, they're mandating that an employer offer some sort of retirement plan, be it a simple IRA or maybe a 401k, and it varies by state to state. But at all levels of government, people are trying to push this benefit.
And Steve, if we read between the lines here a bit, are legislators concerned that perhaps with people living longer, and we all know what inflation is doing to the income that we have coming in, are they concerned that perhaps the Social Security trust will run out? We know companies aren't offering traditional pensions anymore. So between the lines, is it more of a concern that we need to figure out how to, for people to afford living longer into retirement?
Yeah, so you've got people living longer. Social Security is obviously a strain on our federal budget. It restrains our ability to do many other social legislation that would help people in different ways. So there's a massive public policy push, and frankly, it's popular. So I expect the Secure Act 2 to pass, And this is just, a tremendous benefit that people generally don't understand. So that they're trying to push on a string to some extent. The real work needs to be done inside of each individual company, each plan sponsor, and really, at a street level, one participant at a time though.
And Steve, what types of solutions does Shelton provide?
Well, our services are built to get to the core of this issue. And what motivates us is helping solve the retirement plan crisis in America. So we're focused on bringing low-cost plans with a combination of very high level of service for both participants and plan sponsors. So we're bringing real education to participants, and we're making it easy for them to get that education. We're helping employers take advantage of the tax breaks that are that virtually make this free to set up. And we advocate matches in the form of compensation so that when participants do get increases in compensation, that comes as a reward for participating in 401k and saving for their future, as opposed to money that they might just otherwise spend.
All right, Steve, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.